Welcome to Introduction to Finance. This is a short video to give you some of the basics that you'll need to be aware of when starting your business as a sole trader. So here we'll cover topics such as business types, VAT, accounting tips, permissions, licenses, business rates, claiming expenses, submitting tax returns and tax and national insurance. So although this video is for those looking to become a sole trader, the first section will briefly explain the different legal structures that you could start your business or potentially change to going forward should the business grow and evolve. Sole trader is a popular way to get started as it is the most straightforward and potentially easier if you are a smaller business earning less than say £25,000 per year with little overheads. Your business and your personal tax is far simpler and opening and closing the business is easier. It's a simple registration with a HMRC which you can do online or the telephone, and incidentally your business broker can also help you with this section. Self-assessment must be submitted annually, which I will explain towards the end of the video. But the important thing to bear in mind is that you and the business are the same legal entity and you are therefore entirely responsible for any losses that the business may make. Business partnership. This is an extension of a sole trader but containing more than one person. So in a partnership, you and your partner or partners personally share responsibility for the business, and this includes any losses that your business makes and bills for things that you buy for the business, such as stock or equipment. The main thing to bear in mind is that a general partnership is not subject to income tax. Partnership profits are shared among partners and consequently each partner must then pay income tax on the income drawn from the partnership. A nominated partner will be responsible for managing the partnership's tax returns and keeping business records. And whilst there is no legal obligation to do so, it is important to get legal advice on how to draft a partnership agreement detailing how you will work together. Limited company. So the company is legally separate from yourself, which can provide some level of security should the business go under. It's the most tax efficient way to trade. Corporation tax for limited company profits is 19% irrespective of the amount earned. Income tax is then paid on the salary that you decide to give yourself. Some clients may only work with limited company suppliers, so you may have no option but to become a limited company. It can also look more professional and credible. Accountancy fees will tend to be more expensive, and you must register with Companies House plus submit your accounts to Companies House annually. Limited liabilities partnership. A partnership in which some or all partners have limited liability. Each member pays tax on their share of the profits as in an ordinary business partnership, but are not personally liable for any debts that the business cannot pay. You must register with Companies House, a small fee applies, plus submit your accounts to Companies House annually. For further information on setting up an LLP, refer to the government link below. The Community Interest Company, otherwise known as a CIC, is a relatively new type of company designed to provide an effective legal form for enterprises which aim to provide benefit to the community or to trade with a social purpose rather than to make a profit. A CIC must be registered both with Companies House and the CIC regulator. A CIC can be any type of company, even a PLC, although most are limited companies. CICs are not charities and are therefore not subject to many of the tax and other advantages of charitable status. Charitable Incorporated Organisation, otherwise known as a CIO. This is an organisation that is set up to provide and raise money for those in need, usually with a focus on education, religion, public interest and/or the common good. It's a brand new form of incorporated charitable body, and unlike a CIC, a CIO will have charitable status and is designed to be a more efficient way of running a charitable venture. It's designed for not-for-profit organisations and they are not required to register with or report to Companies House but must register with the Charity Commission. VAT registration is compulsory if your business generates a taxable turnover of £85,000 or more. Nevertheless, firms that do not reach this turnover may choose to register voluntarily as this can provide a number of advantages. So there are 3 different rates: standard, reduced rate and zero rate. Standard rate at 20% is for most goods and services. Your reduced rate is for some goods and services, for example children's car seats, home energy, and zero rate for zero-rated goods and services, for example, most food and children's clothes. Advantages and disadvantages of being VAT registered. The first advantage is that small businesses can give the appearance of being bigger and more established. This is because once you have a VAT number, nobody will be able to easily tell if your business turnover exceeds the VAT registration threshold. You can also reclaim VAT on most goods and services purchased from other businesses. The disadvantages, however, it forces your business to include VAT on all your sales. Consequently, your products and services will appear more expensive to customers, and for those businesses who are not VAT registered, this increase may be unwelcomed. It is therefore particularly an issue for businesses who sell mainly or wholly direct to consumers. VAT registration also requires you to submit quarterly VAT returns. Extra paperwork and administration is thus unavoidable, as your business will need to maintain and keep VAT invoices and receipts. Often this means extra costs with your accountant. Accounting tips. First and foremost, it is important that you take advice from a registered accountant regarding your business finances. Your business broker will not provide accounting advice in relation to your business. There are some tips, however, which could help you overcome this area of business. Bookkeeping is a legal requirement, and you can either do this manually or use one of the many electronic bookkeeping systems that are available, which you may find easier and more helpful to run your business with. So for example, QuickBooks, Xero, Sage, Free Agent, WaveApp and many others that are on the market. You must also keep records of your business income and expenditure for at least 6 years in case you are audited by the HMRC, so do be careful not to lose any paperwork such as invoices and receipts. The HMRC can charge you a penalty if your records are not accurate, complete and legible. Therefore, log all purchases and payments, keep accounts of debtors, creditors, and ensure that your invoices include unique reference numbers for easy tracking. And forward planning. Never forget that tax will need to be paid at the end of the financial year. You will find it useful to put this money aside as you trade throughout the year. If you are self-employed, your business will inevitably have various running costs, and some of the costs can be deducted to work out your taxable profit as long as they are allowable expenses. So the allowable expenses include items such as office costs, uniform, staffing costs, stock materials, financial costs, business premises, advertising or marketing, and travel costs. A small note to remember here in case you are using your vehicle for business use, to please ensure that you do have business insurance. Without this, you may not be fully covered by the insurance company, and also you may be fined by the HMRC should you be claiming the 45p a mile without appropriate cover. For those of you working from home, you may also be able to claim a proportion of your costs such as electric bills, internet usage, etc. For further information, please see the Government UK's site, Expenses if you're self-employed. Alternatively, a registered accountant will also be able to provide advice around this subject. There may be some extra costs that you need to take into account if you wish to run your business from your home, for example, gaining licences or permission, and you may need to contact various organisations such as your local planning office, for example, if you're planning on making major alterations to your home, your local council, for example, if you're going to have a lot of customers or deliveries, you want to advertise outside your home, or if you need a licence to run your business. You also need to make your mortgage provider or landlord aware. Without permission, this may affect your tenancy agreement or insurance cover. You may have to pay business rates on the part of your property that you use for your business. This depends on whether the Valuation Office Agency, the VOA, has given a rateable value to a part of your home. You'll still have to pay council tax on the rest of your property. To check if you have to pay business rates, contact the VOA. Business rates are charged on most non-domestic properties such as shops, offices, pubs, warehouses, factories, holiday rental homes or guest houses. You'll probably have to pay business rates if you use a building or part of a building for non-domestic purposes. Your local council will send you a business rates bill in February or March each year. This is for the following tax year. For more information, see the government.uk link, Introduction to Business Rates. When do I submit my tax return? Now, there can often be some confusion around this subject, in particular if you have started trading halfway through the year. So for the next few slides, we have put together an example to show you what this might look like. So for this example, let's pretend that you started trading on the 27th of July this year, and remembering that the financial tax year always runs from the 6th of April to the 5th of April each year. So here we can see 3 years going across the page from 2020 to 2022. As you can see, the week of the financial tax year is highlighted in the green boxes, and the start date for this example is highlighted in red, the 27th of July. From the 27th of July 2020, you need to ensure that you keep a track of all your profit and expenditure up until the 5th of April 2021. The HMRC allow plenty of time in which to submit your expenses, as you have from the 6th of April 2021 until the 31st of January 2022. The 31st of January is the deadline date, so do make a note of this in your diary. It is much easier to submit your figures online, by the way, and once this is submitted, you will then receive the amount that needs to be paid. Be careful, however, not to wait until the 31st of January to submit your tax return, as the system can become overloaded and may result in you being unable to apply in time. Please also remember that failure to submit your tax return by the deadline date of the 31st of January will result in a £100 fine. For more than 3 months delay, this will incur an additional fine of £10 per day. How much income tax you pay in each tax year depends on how much of your income is above your personal allowance and how much of your income falls within each tax band. As you will see in the table below, this shows the tax rates that you pay in each band for the year 2020 to 2021. So as you can see, the personal allowance up to £12,500 is 0% tax rate, basic rate £12,500 to £50,000 is 20%, higher rate is £50,000 to £150,000 at 40%, and the additional rate over £150,000 is 45%. For the financial tax year 2020 to 21, Class 2 National Insurance is due at £3.5 per week. National Insurance is payable based on the level of your business profits and paid in total at the end of the financial year as part of your self-assessment calculation. Unless your profits from self-employment are below the threshold at £6,475, then you will have to pay Class 2 National Insurance. However, in order to preserve your pension entitlement and entitlement to certain other state benefits, it is strongly recommended that you try to pay this amount. As a side note, it's also strongly suggested that you check your national insurance forecast, which you can check your state pension, in order to see whether you have any gaps in your record. Under new pension rules, you will need to have at least 35 years worth of credits in which to receive the full state pension when you retire. It could also affect your entitlement to some benefits in the future if you have not paid enough into the system. As such, you may be given the option to pay Class 3 voluntary options should you not have enough. Please check on the Government UK link below. Now moving to Class 4 contributions. These were introduced so that the self-employed would pay a fairer share of the costs associated with providing contributory benefits. If your taxable profits are over £9,500 to £50,000, you will pay Class 4 contributions of 9% on profits over this limit. You pay Class 4 National Insurance together with your income tax. If profits are over £50,000, then the rate of the Class 4 National Insurance falls to 2% on profits over this higher limit. Below is an example of what your monthly and yearly tax and Class 2 and 4 National Insurance contributions would be if your earnings were £1,300 profit a month with no outgoings to offset the cost. You can find out this information by checking the self-assessment ready reckoner below and also the self-employment tax calculator to give you an idea of how much you will need to save each month in order to pay at the end of the financial year. So here we have an example of someone who is earning £1,300 profit per month with no outgoings, which works out at £15,600 per year. Putting this information into the ready reckoner shows that this person will pay £110.63 each month for tax and national insurance Class 2 and 4 contributions. And to give you an idea how that is broken down further, the figures would be tax at £51.67, Class 2 £13.22 and Class 4 at £45.74. So therefore it is strongly recommended that you put money aside each month into a separate savings account to ensure that you will be able to pay both your tax and national insurance at the end of the financial year. Failure to pay this will result in a fine by the HMRC. So that is the end of the video, and I hope this has helped answer some questions that you might have had. Remember, it is always advisable to find an accountant to help you with your finances. However, your business broker will also be there to guide and mentor you through the process and hopefully answer any further questions or queries that you may have.